Welcome to Explain the Charts. Today, September 17th, 2024, we're diving deep into the USDJPY currency pair. We'll be exploring the recent news and events impacting this pair, and then meticulously analyzing the chart data across different timeframes. We'll look for trends, reversals, support and resistance levels, and key price points to watch. Ultimately, we'll try to determine if there are reasons to be bullish or bearish on USDJPY, both in the short and long term. Get ready for an insightful and informative breakdown of this important forex pair. Let's start with the news, and we're seeing a lot of volatility in the US dollar recently, largely driven by uncertainty about the Federal Reserve's interest rate decisions. The market is currently pricing in a significant 50 basis point rate cut by the Fed, which is weighing heavily on the US dollar. This is especially notable when compared to the Bank of Japan's hawkish stance, with expectations that they will maintain their current rates, leaving open the possibility of rate hikes later in the year. The divergent monetary policies of the Fed and the Bank of Japan are creating a significant disparity in interest rate differentials, which is a key driver of the USDJPY exchange rate. Additionally, the carry trade, where investors borrow in low-interest rate currencies like the yen to invest in higher-yielding assets like US dollars, is facing pressure due to the narrowing interest rate gap. This unwind of the carry trade is further contributing to the US dollar's decline against the Japanese yen. Now, let's take a look at the chart data. If we zoom in on the daily chart, we can see that USDJPY has been on a downward trend for the past several months. The pair has broken below a key support level around 140.00, which is a bearish signal. The recent surge above 142.00 might be a temporary bounce, but the overall technical picture remains bearish. Traders are covering their short positions on the US dollar, but this could be a short-lived rally. The RSI is still bearishly biased, suggesting that the downtrend could continue. Let's look at the 1-hour chart to get a closer look at the recent price action. On the 1-hour chart, we see a series of lower highs and lower lows, confirming the bearish trend. The recent bounce above 142.00 was a strong move, but it's important to note that it didn't break above the descending channel that USDJPY has been trading within. This suggests that the bears are still in control and the recent bounce could be a temporary reprieve. The current price level is close to the 140.00 support level, which could provide some support for a short-term rally. Looking at the 15-minute chart provides even more detail on the recent price action. Here, we see a series of smaller candles indicating a range-bound market. The price is fluctuating between 140.00 and 142.00, suggesting that traders are uncertain about the direction of the market. There's a lot of volatility in this time frame, with rapid fluctuations in price. This volatility can create opportunities for scalping traders, but it also increases the risk of losses for those who aren't careful. Looking at the broader picture, we see that USDJPY is currently trading at its lowest level in almost 9 months. This is a significant move, and it's important to consider the potential for further downside. However, the recent bounce above 142.00 suggests that the bears might be taking a breather. It's crucial to watch the price action closely, especially at the key support level around 140.00. It's important to note that these are just technical observations, and the market is constantly evolving. The news and events affecting the economy can quickly shift the market's direction. For example, the upcoming FOMC meeting could have a significant impact on the US dollar's strength. If the Fed cuts interest rates by a larger amount than expected, the US dollar could weaken further. Conversely, if the Fed surprises the market with a smaller rate cut or a hawkish tone, the US dollar could rebound. In the short term, the key level to watch is the 140.00 support level. A break below this level would be a strong bearish signal and could lead to further downside. However, if the price holds above 140.00, it could create an opportunity for a short-term rally. In the long term, the outlook for USDJPY is uncertain. The divergent monetary policies of the Fed and the Bank of Japan will continue to be a key factor. Additionally, global economic uncertainty, geopolitical tensions, and investor sentiment could all play a role in the long-term direction of the pair. It's crucial to monitor these factors closely and adjust trading strategies accordingly. To summarize, USDJPY is currently in a bearish trend. The pair has broken below a key support level around 140.00, but the recent bounce above 142.00 suggests that the bears might be taking a breather. The key level to watch in the short term is the 140.00 support level. A break below this level would be a strong bearish signal and could lead to further downside. In the long term, the outlook for USDJPY is uncertain. The divergent monetary policies of the Fed and the Bank of Japan, global economic uncertainty, and geopolitical tensions will all be crucial factors to monitor.